All right, recording's rolling. I'm gonna go ahead and get this started. Again, this is more geared towards beginners trying to get into the space. I'm trying to pan it out from one, two, three, and as we advance into the series, we'll get into more advanced concepts as this goes. But again, remember just to keep this simple. Again, it is easy to say that, but I am trying to keep it simple for everybody. Try to be able to take your analysis, take your steps, right? Take your plan and write that down on a piece of paper, whether it's however many steps it is, right? And can a 12-year-old or a 15-year-old or somebody of that nature, right, to where they're not very deep as far as intrusive thoughts go and as far as many things go, right? But just not fully matured in their brain. So you give it to them, and if they can understand it, right? It's that type of feeling that we want to get, right? That type of plan that we want to get, then to be able to have this comfortable memo right in the back of our heads that we can just memorize every single time. This muscle memory almost in our brains that we recognize every single time, right? So we are trying to take it from the simpler steps, right? Just introducing it and then bringing it into it, and we're getting more advanced as we go in. So today is going to be a part three to market structure. We're going to be talking about definitions with candlesticks, kind of bringing almost everything together from higher time frames to lower time frames. Personally, again, I'll say that I am a swing trader, right? I like to hold trades longer over weekends. If I can find the right trade and if I get the perfect setup, to me, right, what I like, then I'll take that and I'll hold it for much longer. I like to swing trade, but it doesn't have to apply to somebody who only swing trades, right? You can scalp with these methods. You can take intraday trades with these methods. You can take position trades with these methods. It's all about the steps of confirmation that you are willing to take and remembering relative time frame take profits, right? Not trying to take profits on a 4 hour chart if you entered on a 1 minute chart with no confirmation, right? Up until that point. Um, there are certain things that we need to sit back and analyze about ourselves as well to then understand what is happening next. So, like I said, we're going to be talking about market structure, a part three, kind of bringing everything together. We're going to talk about supply and demand today. We're going to talk about how I trade it and how it can be traded, right? The wrong ways. We're going to look at both the right and the wrongs. To me, what I believe is the right and the wrongs. We'll talk about a part two to wick off analysis as well, kind of bringing it in now with candlesticks. How did this kind of develop? How can we see it with candlesticks? Because we only talked about the behavior. We showed some theories on our last one. So we're getting into a lot today, and I kind of want to just dive in right here and get started. So we're going to be talking about the part three to market structure today. So just to reiterate on our part one and our part two, right? We're always looking for those higher highs, higher lows, and the continuation. But what did we talk about, right? How the market doesn't move like this. It doesn't show this behavior, right? Where it's just clean higher highs, higher lows, higher highs, higher lows. And you see just this clean pattern type scenario happen over and over again. Obviously, the flip side, you don't see this clean action otherwise this would be manipulated, right? So if we get into this mindset, then we start to get manipulated out of trades. And we feel like our study or our analysis is wrong when really it could be either a patience thing or over trading, right? It all usually just stems down to those type of emotions. FOMO, it's all the same, right? So we're not looking for this clean type of behavior. Instead, we understand that the market moves in this behavior, right? Where we get those manipulations, the breaks, the continuations, maybe another continuation, a reversal, right? An accumulation to distribution, continuation to the downside. Then you get the market coming in, making buy side liquidity, breaking structure again, and the same thing over and over again, right? Where it's still, you can get into that mindset to where it's right, that clean higher high after the higher low is formed here, and then the higher low and the continuation to the upside. You can still see how the theory, right, applies to the overall market structure of what we are looking for, but just the understatement of the market is not going to move with just this clean higher high, higher low type of perspective will give us a better approach when looking to enter positions. So we understand that the market moves like this. I'm going to go ahead and delete these. So we'll get rid of all of that. And then we also talked about the time is power chart that I talked about as well for the timing, why I have so many time frames, right, lined up on my trading view right here, because I look for the top down analysis. We understand that our higher time frames, right, um, are going to hold over our lower time frames, but our lower time frames make up our higher time frames. So if we can do the reverse engineering like we talked about from the higher time frames to the lower time frames, we can get an overall perspective of what trend we are in from market structure, right? So we talked about top-down analysis. What do I look for? The mains, right, from a weekly. So we can just write this down just to make this simple. Weekly to daily, right, to 4 hour, to 1 hour, to our 15-minute, to our 5-minute. Then you can go 4, 3, 2, 1, or just 3, 2, 1, 2, and then M1. And this can even go down to the seconds as well. Let's just make this a lot bigger. But what we are looking at here, right, is the confirmations, meaning this is actually pretty funny, but is the confirmations, right, from time frame to time frame. So if I'm looking at the weekly time frame and I'm trying to get an understatement of where I am, right, on my lower time frames, because obviously we're not going to be taking just all of our trades on the weekly. We want to take some more intraday as well, right, or swings, however you decide to trade, but you're not just going to be taking trades on the weekly, I assume, if you guys are here. So we're looking at our weekly chart, trying to get an understatement of where we're in. So we'll look at our higher highs, higher lows, lower highs, get an understatement if we are in a bearish or bullish market. Look for the breaks of structures, right, where the strong highs or strong lows got taken out. Remember, the strong lows are lows that cause a new high. So this is a strong low because it caused a new high. This is a weak high because it did not cause a new low. Keep it very simple, right? Obviously, the flip side is going to be opposite. But from our weekly time frame, we'll then go to our daily time frame. This will now put in our weekly higher high or higher low if we are in a bullish trend, or it will put in our lower low or lower high if we are in our bearish trend, right? So if we are in a bullish trend, let's pretend this is the weekly, right? We'll look now on the daily. So let's draw this out as a different color. We'll just do green, right? We'll pretend that now this is the trend to the downside on the daily chart. So from the weekly, we'll go to the daily. It's making lower highs and lower lows, right? It comes down into our area, breaks structure to the upside with that impulse, right? You can look at volume as well. You don't necessarily need volume, but you can look at it as a good aid. I like to look at volume as well. Price starts to come down again, right? And now that it has broken structure from a strong high, right, that caused a new low on the daily time frame, this has now put in from our weekly to our weekly higher low, right? So now that we are in this bullish trend and now that our daily has switched from bearish to bullish, our weekly is now putting in a higher low, right? So now this same exact behavior applies from all of these time frames, meaning from the daily to the 4 hour, we're looking for the same thing on this impulse. From the 4 hour to the 1 hour, I'm looking for the same thing once it comes down into this area of demand, and I'm looking for an impulse, right? So now I can confirm from my higher time frames to my lower time frames and get into a swing targeting that weekly area of liquidity, right? But now I'm on my lower time frame, so we can get that much less decreased risk that we talked about and that higher R&R. So we are now break even quicker, right? Much quicker. We can take profit much quicker because we have higher R quicker, right? It's that time efficiency that we talk about, and we're getting into that as well at the end of our stream. But this can be applied from time frame to time frame. So if you don't want to swing, right? Because I like to swing personally, I like to swing. If you do not want to swing and you're just trying to take intraday, right, or lower time frame scalps, whatever it is, right, you can now take a 4 hour range and either play the 1 hour structure, right, with the 15-minute confirmation, or even lower than that, right, a 1 hour range with a 15-minute structure break, right? With a 5-minute confirmation of that supply and demand. So you can start to play these lower time frame ranges as you start to go. So what I like to do personally is get my higher time frame narrative. So if I'm looking for this overall and I receive a daily break of structure to the downside, what does that tell me? My weekly has put in my higher high, like we talked about, our higher highs and higher lows. Now that we got that break of structure to the downside, right, we'll look for that area of supply and demand. We're getting into that as well. We get that break of structure to the downside, get that area of supply and demand, look for the confirmation within, right? And I now have a short trade to my area of weekly demand, right? So we now have these available opportunities um, given to us, right, on both sides of the market. So even though I'm bullish overall, I can now start to play that lower time frame narrative with my higher time frame narrative, right? So I can now start to confirm it. So what if we come into these areas? I'm in a short position right here. I have a take profit right here. What if we come into these areas and then we just continue and break structure downside? And this weekly, right, what we thought was a break of structure to the upside ends up just being a liquidity raid and instead just continues to the downside, right? I now have that short position that I have opened right here, still running in profits, right? We now have these scenarios where we can protect ourselves, we can hedge ourselves as well, right? Let's say I get in a long trade right here. We come up to this area, we start to break upside, and then we start to show this reaccumulation behavior. So we come down, right? We take highs, and then we break structure to the downside. And I have another area of supply and demand. I'm looking for the LPSY, right? That last redistribution. And I have an entry now into areas of demand, right? That broke structure to the upside. Again, I can hedge and do the same exact thing. And then I wait till that area of demand comes, and I look for the accumulation behavior. If it's given, I can either add to my positions or add new positions, right? Still targeting that area because I've now put in that overall, right? Higher high, higher low with the confirmation that was given right here, right? So this is that type of behavior that I am looking for. It can seem like a lot, but if we keep it simple, all we're really looking for, if I go ahead and delete all of this, is that 1, 2, 3 type of step behavior, that impulsive move that breaks structure to the upside, right, and leaves that displacement candle. We'll talk about displacement as well, with that area of imbalance or that fair value gap, as ICT teaches it, right? That area for price to come back into and for algorithms to pick up more positions and start to continue into the next area of liquidity on the opposite end, right? We talk about those as well. We'll talk about how they are formed, but we look for that impulsive move that breaks structure either from a strong high, right, or a strong low. And then we look for the mitigation of the area that sponsored that move to the upside, right? Either with an imbalance, or in the demand case, we'll see it come into the area and then liquidate early longs, getting into trades, break structure to the upside, and then start to move higher. We'll talk about that as well. But we look for the impulse to move that breaks structure. We look for the area of supply or demand, and then we look for the confirmation of it. That is as simple as it is. From the strong highs or the strong lows, keep it right as we were talking about. So we want to, I want to go ahead and get into some candlestick examples as well. We're going to go ahead and get into accumulation after, but right now we'll just do it from a market structure standpoint. I did post this back test, but I kind of wanted to go over this with you guys live and with some replay mode as well. Before we'll just talk about the candlesticks, the behavior, and then we'll get into the replay mode so we can really get that deep understanding of what we are looking for when we get into these type of trades, or when we're trying to get into these high R&R types of trades, right? We can see scenarios, and we'll also look at losing scenarios, because this is something that many don't do when they're back testing, when they're going to look back at their trades. Journal your trades, go back and look at them and understand why you lost, if you lost, or don't, right? But you can also apply this to back testing. So if you apply it to back testing, you can start to get more of a understatement of your or understanding, sorry, of your style and start to hone in because this is what you want to do once you start to get that repetition type behavior. So now you can know what your strengths and weaknesses are, and then you can capitalize off of those, right? So we'll go ahead and delete this. We'll get into these candlestick examples. We'll talk about the higher time frames to the lower time frames and how this made sense, right? So I want to go ahead and take all of this off and we'll do some technical analysis. So again, we'll talk about the top-down analysis. On ETH, right, you can see we broke structure downside from lows that caused new highs overall. You can see where that happened right here. You can see the area of supply and area of imbalance as well from candles that broke these lows right here that caused new highs. This ended up being a liquidity raid to the upside, mitigation of this fair value gap. You can see right here that was caused from this down move to the downside. And then we had that continuation all the way down into these areas right here. So if we look on our daily chart, we understand our weekly is bearish overall. We look on our daily chart, we look for our range. Where did this start? Where did this end? We talk about drop-based drops and rally-based rallies. For the continuations, right? Those redistribution and reaccumulation scenarios that we see that drop base drops, right? Remember, this is a daily chart. These candlesticks tell a story as well, right? And that's why I sometimes talk about candlestick patterns with dojis, dragonfly dojis, gravestone dojis, right? Hammer candles, these three white knights, all these candlestick patterns that you might hear some smart money traders use, right? It's just added confluence to what is coming up to our scenarios. But on these scenarios, we can see that candles that show consolidation and show the opposite side, right? This obviously got some type of liquidity within the market, meaning this consolidation on a daily chart got some people to long this, right? If we're looking at it from this perspective, maybe they say they caught the bottom, right? They're looking at it maybe from a support and resistance. They have a breaker or something right here. From maybe this break to the downside, right? They say this is a solid area, and we come back into it and we start to consolidate and start to move higher, right? Start to move over it. Whatever they have, right? It starts to give them this sense that they believe it's going to hold their lines or hold their bias until, right, they are liquidated out of their trades. But us as smart money traders want to get a sense of order flow, where the market is moving at all times, right? From the perspectives of goals to goals, right? Meaning you enter your trade targeting that liquidity goal, and then once you are in, you are okay, right? You walk away from your trade, and then if you are stopped out, you'll understand why. If you are not, your take profit, right, is hit and you are good to go. But understanding this from a market structure perspective from higher time frames to lower time frames, we talked about the drop based drop. So this is our area that started this break of structure to the downside. Obviously, we have higher areas up here, right, from an overall range perspective. But if I'm looking at my most recent supply zone that broke structure to the downside, gave that displacement candle, right, we can see that move to the downside right here. So I had an area of supply right here as the drop base drop creates that area of supply, and then I had this range right here. So let's understand this from a market structure perspective. We talked about premium and discount, where the daily broke structure to the upside, and not to get into more of an external type of behavior or feeling, meaning when you are trying to trade these, like where does the actual supply and demand be introduced? And we'll get into this in a second. But let's just show this from a market structure perspective. And I like to draw these out a lot for you guys when I am showing this and for myself as a good visual, right? It is something that I can do something like this, right? Show the market structure of how price is moving as we are moving up and down throughout the range. Right, the moves to the downside, the consolidation, where does it happen? The breaks. Let's draw this up here. The continuation, right? The reversals, Where's the consolidation? Just looking to draw my market structure of my highs and my lows. I can literally do something like this, right? And I actually wanted to draw this out right here because this is important. But if I do something like this, right, and then I literally just take my candlesticks, hide them, quick trick, we can see where that market structure happened, right? This was important why I wanted to draw this right here because we came up, made a new low. You can see we took out this low right here, made a high, then a low, then broke that structure point to the upside. So we can see where the reversal happened. On a weekly chart, remember, we were bearish. On a daily chart, that indicates our pullback, our lower low. So if we're coming up to make our lower high, we're looking for the daily break of structure to the upside. Where did that happen? Break of structure to the upside occurred right there. We came up, made a new high, right? We can see that happen, came down, made a higher low, and you saw that reversal. So that theory that we were talking about is now coming into life, right? We can take away this market structure as well. We'll throw back on the candles. Actually, let's just look at this and let's look at now where the 4-hour occurred. So when it came down to make that higher low, where did that 4-hour break of structure occurred, right? Where was that either double break of structure or break of structure to the upside? Where did that occur? We can see a break occurred right here after we came down, consolidated, right? And then started to make this new high. So this could be our first area, our change of character, if you want to call it, that we created one high, and then we made another high with an impulsive move to the upside. We look for that institutional candle, right? That either last down move before the up move, or vice versa, these areas of consolidation as the demand for the break of structure upside, multiple confluences, right? We see price came down, took out the lows, and then broke structure to the upside, then started to move higher overall, right? We had our break right here after the liquidation of these early longs found in these trades right here. What does early longs mean? Before the entire range break occurs, so we can see this high caused this low. We came up and actually did not create a new high after this happened. So we got more short trades, more short traders, right, into trades. So more liquidity, more reason for price to continue to the upside after we came down here and created a higher low. So price comes down, first liquidates longs, right, that tried to get into trades right here. They thought it was going to move to the upside immediately after this happened, but it just came down, created that higher low from a market structure perspective, came back up, did not create a new high, right? But as long as this low comes up here, right? And when it came up here, it liquidated these highs, right? This is something that we need to look at and something that we need to show importance to because this high caused this internal low, right? But we need to understand as well, right, that this high did not cause a new low overall. So where did that break of structure occur to the upside? All right, let's just go ahead and delete this. But where did that break of structure occur to the upside that we talked about? Right here. So where was that strong low put in place? Right here. So as long as we hold this low that caused this high, we are expecting this high to be taken out. Now this high does not cause a new low. And this was the strong low that had caused that new high. So to not confuse everybody, we came up, broke structure to the upside, came down, created a higher low. This high did not cause a new low, so we're still expecting it to be taken out if this low is held, right? And we still see the breaks of structures to the upside within areas of demand. So we see it created that higher low, came up, broke internal structure to the upside, right? That occurred right there, came back down, created that higher low, broke structure once here, broke structure twice here, candle before, right? Area of demand. You now have your entry area of confirmation to take it higher up into areas of buy side liquidity, areas of supply, right? After that trend shift occurs, we can now see how it starts to become easier. And this is just from a daily to a 4 hours perspective. We're going to show from our higher time frames to our lower time frames here in a second. But I want to show you the supply and demand first. What is it? What is real supply and demand? How can it be wrong as well? Because I want to show you guys both sides of this technical analysis and how we can get it wrong. And again, right, anything that is profitable is not wrong. So as long as it makes sense to you and it's comfortable to you and it works, right, keep rocking with it, keep honing in on it, keep going down on that perspective, and try to get it as best as you can, right, as consistent as possible, because once you're at those stages, then it is easy, right? Then you can sit back and then you can take those trades and then you can go out and do whatever you want to do. It's completely possible. You guys just need to put in that work for it, right? You got to really want that and try to get out there. So, with that being said, right, with the market structure being shown, with everything that I just showed you guys on that type of analysis, I want to get into now supply and demand. What is it? How is it created, right? And how can we spot it from a non-support and resistance perspective, meaning, or a non-striped pajama perspective, as MentFX likes to teach it, right? Meaning we're not looking at charts like this and just finding every area, or let's just put it replay like this, right? Just finding every area of possible supply and continuing to take it to the downside if we are taken out of our trades, right? So not finding an area right here on lower time frames or something similar, and then drawing out something like this, or supply zones right here, right, or areas right here, and then you now have this area of support and resistance, or this striped pajama theory, where every single one of your zones are going to get destroyed as you now get taken out of your trade. So you shorted it right here, you get a little bit of profits, maybe you take profit at these lows right here, you're good to go. And then it comes back up, you're like, oh, it's in my zone again, and then you see a large move off of it, so you short it some more, try to take it to the downside, then you're taken out of your trade, or not even taken out of your trade, it starts to come up higher. So what do? You take off your stop loss, right? You find another zone, you take out that zone, you get taken out of your trade, or you're still holding, so you find another zone, right? You get taken out of your trade, or you're still holding, you find another zone, so on, right? And you're taken out of your trade over and over again, or liquidated at this point in time, because you try to get in this one direction theory mindset, right? That it's just going to immediately just liquidate your accounts over and over again. That's just the cold hard truth of what trading is, how it works, right? And I'm sure most of us, if not all traders, have experienced that. I don't believe it is something that traders don't experience. I believe it's just a part of the game. Everybody does experience it, but it's up to those who take it as a lesson and not those who take it as I'm bad at this, or those who quit, right? If you quit, you quit. That's completely up to you and your perspective, how you want to trade. But as far as how we are looking to trade, as far as how we are looking to take trades, as far as how we want to trade, as right, Playbit, as smart money traders, as institutional traders, for those that are in here trying to get the work in, right? We want to have that consistent, profitable system, and that is what I'm trying to teach, right? So, what is supply and demand? How is it created? How is it traded? And how we can look for the real supply and demand, right? So, I'm going to go up here real quick. Let's make it as simple as possible. Demand, from a theoretical perspective, right, a hypothetical perspective. We're not talking about what it actually is. Is this right or is this wrong, right? But what I am talking about is something that I have worked with, what has been proven to be consistent, right? And what you guys can go ahead and go look in the charts as well and look at them and say, is this consistent for me? And see how it starts to show up. Start to see these accumulations, distributions, Wyckoff perspectives, market structure, right? How it starts to play out, right? It's a whole narrative. It's like a story, and then you are finding from your higher time frames to your lower time frames that area where you can now enter, and then get into your trade, walk away from your trade, and be protected and not be manipulated in these scenarios, right? So, what is demand? Demand is an area of buyers from a theoretical perspective, or in this case, the area of institutional volume, the area of institutional buyers, right? The area of institutional money that has entered the market to take price higher to the upside. So demand is an area of buyers. Supply, opposite. Keep it simple. Area of sellers. Right? We have supply and demand. How is this found? How can we spot this? An area of consolidation before an impulsive move. So let's go ahead and write that down. Impulsive move that breaks structure. How do we call a structure break? From a strong high or a strong low that is broken to the upside. This is how we can figure out where that demand and where that supply is. Area of consolidation before an impulsive move that breaks structure. Personally, I like to look for the candle before the candle that breaks structure to the upside. This can be used in two ways as far as demand goes, and we'll talk about this with this accumulation that we are going to go ahead and look at in a second for Ethereum that had happened. So we'll look at that with candlesticks as far as how supply and demand works, but it's an area of consolidation before an impulsive move that breaks structure to the upside. So if we have a downtrend, right, and then we get that structure break to the upside, that impulsive move, we'll look for the consolidation, this area right here, that had sponsored that move to the upside. We'll look for consolidation within these areas right here. If there's a reaccumulation, right, a rally-based rally, an area that creates demand. We have to remember our rally-based rallies. So we'll see something like this. Reaccumulation, right, continuation to the upside. But our rally-based rallies, areas of consolidation, can create demand, right, and our drop-based drops can create supply. So if we have a drop-based drop, right, and that supply, area of supply is broken to the upside on this impulsive move, that strong high that caused this new low is broken to the upside. I've now been disproved, so we can see where the disproval theory comes in as well if I'm continuing to take this to the downside. I have the structure break with the impulsive move. I have my area of consolidation within here, so we maybe saw something like this. Came up right here, reaccumulated, went higher, right, started to make that reaccumulation, came back down into this area of reaccumulation, area of demand, broke structure to the upside. We now have our next area of demand, enter our trade, and then it continues to the upside, right? So let's go ahead and put all this back. But we can now see where supply and demand is starting to be introduced. So we have the area of consolidation before the impulsive move that breaks structure. And then I'll show you guys the candle before candle as we get into these trades right here. So I kind of want to get into the candlesticks right now. This is simple as it is as far as supply and demand goes. I don't want to make it very, very complicated. But if we can look at this, where's that consolidation or that candle before candle that broke structure to the upside on that daily chart like we were looking at it? Right, your structure breakers right there. There's your candle before that candle where that demand was introduced after a liquidity raid to the downside. So the early buyers were taken out of their trades right here, meaning anyone who tried to catch a bottom was taken out. That liquidity was now available to the market. More money was open to the market, so algorithms can now enter their trades with more money, start to push price, right, in either direction. They push price to the upside. Structure break occurs. We break structure to the upside, come back down, right, liquidate the lows that we saw right there, right, we'll just bring this back, show this right here, liquidate the lows right here, keep that higher low, right, maintain that higher low after we came back down into this area of demand, and then continue to the upside. We broke structure on the 4 hour like we showed right here. That same impulsive move that I was looking for right here was shown to me right here from the higher time frames to the lower time frames, daily to 4 hour chart. The same impulsive move that was shown to me right here that broke structure to the upside from a high that caused a new low after liquidating longs. Right, we came back down, mitigated demand. Where's the 4 hour break of structure after liquidation or the manipulation, right? We get the liquidation. We get the break to the upside on the 4 hour like we were showing, the double break even, and then the continuation to the upside. So now we have that reversal from our weekly to our daily, putting in our lower low, to our 4 hour, confirming our lower low, And then we could even go to the 1 hour and so on as we start to move up within the range and get more confirmation as we get these structure breaks, these impulsive moves, right? But this now gives us this sense, this ability to be less stressed, right? Because we now have an overall narrative and we have areas, right, where we are looking for a price to mitigate, areas where we are looking for a price to tap into, right? That's what I talk about when I talk about mitigate or absorb certain areas, meaning we can see the absorption of demand right here, right, as it's constantly manipulating lows and leaving the highs, showing us that buy side liquidity forming that reason for price to continue to the upside after putting in that bullish narrative, right? The equal highs that we can see that are formed right here. The equal highs that we can see that are formed right here. After the early sellers are taken out in the form of equal highs, that liquidity that we talked about, right? Now that the early sellers are taken out, supply is introduced from internal structure breaks to the downside that we can see right here, right? We're looking at the wicks, comes back up into these areas. On obviously the daily chart, we can look for areas of supply from candles because I look at bodies from the daily to the 4 hour, but looking for the wick for the internal breaks of structures to the downside just from this daily chart right here. We can see that I broke structure to the downside right here. Candle before that candle, right? Your area of supply is found on this move right here. It comes back up into that after breaking structure to the downside, into that area of supply, break structure to the downside, right? Creates more areas of supply that I'm looking for price to come back into, mitigate, possibly continue to the downside if it is shown. If not, and we get some more reaccumulation type of behavior, I'm looking for price to continue to the upside because internally, right? Let's look for where demand was introduced. We saw that first structure break to the upside, the confirmation. So we have demand down here, area of consolidation before the large up move to the upside. We saw price come up, make that rally base rally. So more reaccumulation right here. And then I had another distribution to accumulation. So we liquidated these lows, took out the early longs who tried to get into trades on this bullish up candle to the upside right here. Came back down, created that higher low, so another higher high, higher low. All right, we can see where that market structure is being shown. If I mark it out like this, higher low, continuation to the upside, right? Where was the next area of demand introduced? On the daily chart, we can see how this move to the downside, right? This large daily candle to the downside caused a lot of shorts. It might have even caused smart money shorts or people who are just playing market structure, right? Because they look at this and they say, we have a displacement to the downside, break of structure to the downside. I'm immediately shorting this when it comes into this area, but we still need that 4 hour confirmation of that break of structure to the downside within this area. So then we don't get taken out within our trades, right? If we get that break of structure, then we now have an area of supply to look for a price to come into and to take it to the downside, which is shown right here. Right, so it's that same type of theory where we can disprove ourselves and approve ourselves when trying to get into these trades. So we see that price comes up, makes that area of demand, comes back down into that area of demand, breaks structure to the upside again on the daily time frame. Right? Where's your next candle? Right? Before that candle that broke structure to the upside, we can see that is presented right there. So we'll look at this and say, okay, is this not an area consolidation? We just talked supply and demand. How is that working? Right? How does this make any sense? Let's go to the lower time frames. This is a 4 hour chart, so not even really the lower time frames. Area of consolidation before an impulsive move that left imbalance. Right, we can see that is being shown right there as well. What does the imbalance mean? It means not enough orders were able to be filled on these moves to the upside right here. So spreads were too high, whatever it was, because price was moving so quickly. So then not enough orders were able to be filled on these moves. So what does that mean? That means there are open orders, right, that we are looking for price to come back down into. We are looking for the sponsorship of the move that broke structure to the upside. So we can see the new high was taken out right here. The internal high, sorry, was taken out right here. Candle before that was shown right here. If you wanted to even refine that from a daily to a 4 hour, right, you can see that it's being shown right here. So you now have more opportunities that are being presented as time progresses. right? But the liquidation of these lows right here shows that now the early longs are out of the market. More shorts are into their trades, more buy side liquidity is available. We have a distribution to accumulation, which tells me reaccumulation. We have a break of structure to the upside. We have a fair value gap that is presented. We had entries right here as well from these breaks of structures to the upside, introductions of demand, right? But we can now start to see where supply and demand is being introduced on these moves to the upside and the downside. But on the daily chart, break of structure to the upside, demand, confirmation of that, reversal is being put in place. Price is not going to move until all time frames are aligned up into that point in time, and then you can get that entire move. And that's why I like, as a swing trader, to wait for the higher time frames from either a daily to a 1 minute, even a second time frame sometimes, to or from a 4 hour right to a 1 minute, or sometimes even a 1 hour and below to a 1 minute or 15 second, because I can obtain these larger R&R opportunities for myself to hold longer and with more margin available in my trade, risking a lot less, right? Because there were scenarios, and personally, I like to swing trade where when I had first started, and this is just personal, but with other traders who were using larger stop losses, and this is not wrong to anybody, right? As long as your margin is calculated to your stop loss to lose that 1 to 2%, right? Or 1 to 3%, however you are looking to calculate your risk. But personally, I like, and for funded accounts, that 0.5 to 1% risk mark, right? That risk area of where I'm looking to have my trades. But if you have those higher stop losses, just have to calculate that margin available to that, right? So you're still not risking all of your port, and you end up losing it on a 1% move or a 2% move, right, to the downside or the upside. We still have that risk management available. So then when we do lose, we can take that as a lesson, or sorry, when we do lose, we can take that as a lesson, go back, look and understand what happened, and not be affected, right, too greatly by that loss at all, because you now only lost 1%, but you now have a higher R&R opportunity available to you. So when you do enter your trade, you will make that back, right, and make that back and some way quicker, and it'll just blow it out of the water, right? That is what we are looking for as those institutional traders that are looking for the high R&R, low win rate type of scenario that we had talked about, right, on our last session that we had done. So with that being said, I'm going to go ahead and kind of clean this up for everybody right here real quick. Talked about how supply and demand works. We're looking for the break of structures after the liquidation of the early buyers and the early sellers, depending on whatever trend we are in. If we are in a bullish trend, we're looking for the mitigation of demand after the liquidation of early longs, or sorry, late longs that are trying to get into trades. Both early and late longs, the manipulation of lows, right, while we are leaving highs, you can start to see the confluence. It's literally all the same. We see a lot of, and this is something I want to kind of point out as well, but we see a lot of, and we'll just leave that back on, but we see a lot of certain names, right, and these terms and everything being thrown out as far as SMC goes. But I want you guys to just understand that all of this is really the same, and it points to the same behavior, meaning it's all pointing to the same type of look on the charts, the same type of picture that is being painted that happens, right, over and over in these, what we get to, these pattern like recognitions, right, this ability to understand that with these certain probabilities, this is most likely to happen based on backtesting, based on experience, based on videos, right, that you find on YouTube, based on other traders. All of these confluences that you can now put into these charts, these perspectives that you can get when looking at these trades, getting into trades, so you now have that comfortability to enter your trade and understand, because of all of these probabilities, then I'm completely okay, as well as I'm managing my risk, so I will be okay, right? We now have, we're not checking every single box, right? This whole system is set up to where if we lose, we don't lose big. If we win big. We have turned the tables on trading, right? And we have now gained this ability to uh, grasp a much larger scale on our portfolios over time, right? So we talked about how supply and demand is formed after the breaks of structures from the early buyers and sellers. And I kind of want to get into Wyckoff now, a little bit of part two with the candlestick analysis. So last time we talked about, and we're going to be showing a common accumulation today, a few accumulations, how it's fractal as well. But from just a behavioral perspective, I personally do not like to label as this got myself, just myself. It doesn't need to be you guys. If you guys like to label them on the charts, feel free to go ahead. That is completely fine, right? I personally don't like to label as far as these behaviors start to come up because it got myself into a pattern like mindset, meaning if I didn't or if I saw an accumulation or what I thought believed to be an accumulation, right? I was like, lows are constantly getting manipulated. We're leaving highs. So if I just replay this, bring this back like right here. And I got into this just accumulation type of mindset, right? Where I'm constantly saying lows are manipulated. We're leaving highs. We have a lot of buy side liquidity. We need to take it out, right? Before we continue to the downside, we need to come up and hit the supply zone. We're going to do it right here. All right, we'll have an accumulation, so maybe distribution or a full on accumulation and try to take it to the upside, right? But what instead happens is you get stuck in that mindset and then it's the same exact thing, right? Or no different from even a support and resistance mindset where you're constantly buying that zone, right? Because it's your zone, it's your box, it's what you drew, it's your support. You believe it's going to hold, whatever it is, right? You want to be right. You don't have to be right. Remember that. We have to look at it from a market structure perspective as well. We have to put multiple confluences now into play. Break of structure to the downside. What sponsored that? Area of consolidation, right? Before that break of structure to the downside, we can see a liquidation right occurred right here. Then the break of structure occurred to the downside right here. Area of supply, right? Your candle before that candle that broke structure to the downside. Up to the wick is shown right here. It comes up, continues to the downside. So we can see instead that the accumulation occurred right here. Price continued to the upside, right? We had the manipulation of lows right here. Price continued to the upside right here. And then it distributed and created more supply. So we broke structure to the downside. You can see that happened right here internally. Then we broke structure to the downside externally, right? So now my internal break is met with that market maker M. Introduction of supply, break of structure to the downside, displacement candle, accumulation to then distribution, right? Redistribution, multiple confluences coming into play. Higher time frames to lower time frames, daily break of structure, and we'll look at 4 hours and multiple ones within here as well. From higher time frames to lower time frames. But if we keep it simple, right, and understand that we need multiple confluences and use multiple confluences, we don't get stuck into that it's just accumulation, it's just manipulating lows, it's going to continue to the upside, right? Mindset to where we're now stuck in longs when we should have been shorting, really, right, the whole time because our higher time frame narrative overall is bearish and has been bearish ever since the supply introduction that we had back in November, right, of 2021. Right? This is where we switched bearish overall. This is where we ran highs and then broke structure to the downside, where supply was introduced overall. While everyone was sitting there trying to take this to new all-time highs, right? Trying to take this to 10K, trying to take Bitcoin to 100K, we are now shorting, taking it to everybody's liquidations, because what do they look at this? They take a weekly chart. They've been invested, right, since May, right? Maybe they even invested in July. They invested at the bottom, right? They got in right here, maybe. So they're liquidated out of their trades right here. Or they're not liquidated. And they're like, where am I going to put my stop loss? Where am I going to put it? It's not going to go any higher. So they look back. Right? We can put this in replay mode. Where am I going to put my stop loss? Where am I going to put it? Uh-oh, price starts to move higher. Uh-oh, it starts to move higher, right? So maybe they put it right here. We now have more liquidity available within the market, but where's the most external point within this large impulsive move to the upside, right? That we are looking for price to now take out. That sponsored the move to the upside, right? We can see lows down here as well as lows down here, but internally we're looking at this low right here. All right, we'll draw that out. So now everybody puts their stop losses, and that is being shown, presented with the equal lows that we can see available right here underneath these lows. This is a weekly time frame. A lot of liquidity is available right here. So once the weekly structure broke to the downside, this was the goal. That weekly liquidity, right? That overall liquidity. What happened? Now people are putting more longs into trades, right? They're trying to continue to take this to the upside, buy the dip, buy the dip, buy the dip. What happens? Continues to the downside. Now takes out all of those lows. Now that all the lows are taken out and they're like, oh no, short, 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 what do we see? Moves to the upside, right? Impossible weekly, changes of character, right? Breaks of structures and moves higher into areas of supply or into areas of imbalance overall, right? From now internally, as far as our range goes here, but we'll be looking externally if we can break that internal structure that had broken this structure to the downside from this high to this low right here on this break of structure to the downside right here. But keep it simple. Keep it very, very simple. We now understand why Bitcoin had the dump that it did, right? And why it continued for as long as it did, because we saw that daily introduction of demand that put in our weekly pullback into areas of demand that sponsored this break of structure to the upside, right? So now that we are still bearish, we are looking for this behavior right here. And this is where it was very prominent because we get this liquidation of the highs right here, as well as mitigation of that fair value gap and daily or lower time frame supply. If I just go back and bring this here, you can look at the 4-hour. Areas of imbalance, right? Areas of consolidation, areas of supply within, right? We can see it came within that area of supply, took out the highs. Now that all the early shorts are out of their trades, right? And the longs are, everybody is in longs, trying to take this to the upside. We break structure to the downside, introduce supply. We now have the reason to continue to the downside. What do? Continue to the downside, right? So from our weekly time frame still being bearish, we are looking for price to come down to these areas, break structure to the upside, show the confirmation of that. If we wanted to see the continuation overall, but we understand we are still bearish as far as the order flow goes from this move right here. So if we do not come up to these areas of supply, mitigate them, and then break them, and then start to pull back, right, and then break structure and confirm, we can see that overall move to the upside and that overall continuation. We don't break that structure point to the upside. Instead, we just take out all the shorts, right, raid all the shorts. And after we are done raiding all the shorts, we introduce supply and continue to the downside into that overall liquidity goal. Keep it as simple as possible. Once the early longs or the early shorts are taken out of their trades, look for that break of structure with that displacement. Once that occurs, right, have your area of supply or demand, look for the confirmation, and then enter and walk away, targeting that other liquidity goal, right? So from our weekly time frame, we can see that liquidity goal that was given to us right here after this break of structure supply was introduced right here on a weekly time frame. So now let's get into an accumulation, right, from that candlestick perspective. So we've talked about how it is bad, how it can be bad, right? And this can be shown for anything, meaning this can be just market structure. If I'm just playing market structure, I can be taken out of my trades, meaning if I'm just playing if I'm trying to just play market structure right here, right, I see a higher high, a higher low, and I'm like, I'm in my trade right here, right? It's creating a higher low right here. So I get a long position targeting that overall goal, right? What does it do? It liquidates me. I end up being an early long, right? Then price comes to the upside. It liquidates now the late longs that are getting into trades. I'm like, oh no, made it another higher low, right? It's gonna continue to the upside. It's not there yet. We have to wait until it is there, right? It's not going to continue to the upside until it is shown. So what does it do? It comes back down, takes out those longs, and then now that the market structure is being shown on the lower time frames of those breaks of structures to the upside from now a daily to a lower, we now have our areas of demand. That 4 hour within this area that I have circled right here, but we now have that area of demand that we can take to the upside from our higher time frames to our lower time frames now that it has come into place. But how can we look at this from an accumulation perspective, right? Obviously, some are going to look at it from the labels, but I'm just going to show you this from a behavioral perspective. What were we doing? What were we looking for from the accumulation standpoint? We talked about this in our last one. With accumulation, we are looking for the manipulation of lows while we are leaving buy-side liquidity. We need to confirm the accumulation with the break of structures. Okay? So within here, if it's still manipulating lows, if you don't have that daily break of structure, right, and the confirmation of that from the daily to the 4 hour, it could definitely not continue to the upside. It could definitely continue to the downside from our overall bearish market that we have put in, right? It could do exactly what we did here, which is just raid the highs, create supply, continue to the downside, right? Everybody was in shorts, 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 shorts from all of these displacement candles that were given right here. They continue to short it to the downside, try to take it to the downside. They put their stop loss right here, 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 right? And then as they're taking out their trades over and over again, they're trying to cover, 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 cover. And then they long, right? Once they're completely liquidated, after they have put more money into their portfolio, right, after that payday comes around, and then they get that break of structure to the downside, and then it continues to the downside, and now they're liquidated again, right, and then they quit trading. It's all psychological. We need to be patient, and we need to understand when it is coming into play. So from an accumulation perspective, we are looking for the manipulation of lows while we are leaving highs. Is there equal highs? And are we taking out lows and breaking structure to the upside and showing impulsive moves to the upside? That's all. Okay? So we come down into these areas. We manipulate lows. We can see we take out equal lows. We take out lows. And then we break structure to the upside. Was there an impulse? Let's go ahead and check on my 4 hour time frame, my lower time frame. Oh, yes, there was. Did it leave an imbalance? Yes, it did. All right, we can now see where this came into play. Did it leave that imbalance after that break of structure from my higher time frames to my lower time frames? Did it mitigate that imbalance and then break structure to the upside? Yes, it did. So I now have an imbalance, a fair value gap, as ICT likes to teach you as well, right? After that liquidation of lows to the downside, that break of structure to the upside, your spring, right? Your test of that spring, the demand creation, we get internal breaks of structures to the upside. We come back down, mitigate that, break structure to the upside, show your areas of demand, right? And then you have your full move to the upside right here. So there wasn't areas of impulse, right, that left imbalance that we had come down and mitigated and still respected within this area right here. Yes, there might have been on lower time frames, and let's go ahead and look on lower time frames to see if we can see, right, an imbalance candle on this move right here, right, came back down, but it came back down all the way into this institutional candle, liquidated lows, and then broke structure to the upside. So we could have waited for that W, right, that confirmation when coming into these areas of demand to show where that demand was introduced overall. So we saw the first move, second move, that actual break of structure, demand introduction candle before that candle that is being shown right here, and then the full continuation to the upside. So you have your imbalance after the liquidation of lows or your fair value gap, entry on that, right, after the liquidation of lows here, or we wait for the full manipulation, breaks of structures, double MB, right, for the continuation to the upside overall. So we can see now from an accumulation perspective that we were manipulating lows, the wicks to the downside that are presented, right, manipulating lows and leaving highs. Where are the highs that we are leaving? Where are the equal highs that we are leaving? Every time we are coming to the downside, look how lethargic these candles are to the downside. We don't see a lot of displacement candles that break structure, right, to the downside. Meaning if I look at this, and look at my wicks and look at what is taking longer, meaning after we come down into these areas, right, what is pushing higher after we break structure quicker, right? We can see if we just look at it from a time perspective. This is just to do some little analysis on it as well. But from a time perspective, we came down, created a high, so we consolidated right here as well. From a 4 hour, 4, 8, 12, 16, 20, 24, right? We look at this now and we say, okay, this is a full day now that it has been taking to come to the downside, right? And then 4, 8, 12, half a day, we already break structure to the upside and introduce more demand on lower time frames internally. We can already see that price is moving quicker to the upside, and that's just another indicator as well, right? And leaving imbalance on candles to the upside versus to the downside. We're taking care of everything to the downside, right? The wicks that we can see as we come into these areas, and then we break structure to the upside and continue to the upside internally. We come to this high, right? We respect that high, come back down into these areas, respect the low, introduce demand, continue to the upside overall. This was your internal break of structure. This was your demand introduction, higher high, higher low, continuation overall. We're starting to see now how this all comes together from our higher time frames to our lower time frames. And in our next session, I want to talk to you guys about now this entire theory, and we're going to set it up from a higher time frame to lower time frame setup, from literally our daily to our 1 minute, and we'll show you how this kind of gets all put together. But I want to show you this accumulation, show you why this accumulation occurs, show you how it makes sense with market structure as well as supply and demand, and how we can look to enter trades upon those, right? And not get confused within these areas. If we want to throw on the volume, to throw on the volume. Right? Where were those areas of demand introduced? Right? Where were those breaks of structures to the upside? We saw the break right here. Right, on this move to the upside right here. We saw that impulsive move to the upside right here. Was there volume on the buy side? Yes, there was. If we look at it down here, right, we can see those buy candles that are being formed that break structure to the upside and show that demand introduction, right? We can see within these areas we are increasing volume, right? But we were still showing that bearish nature. So even though our volume was increasing, we were still looking for the overall downside until we get that volume increase and the break of structure and we leave imbalance, right? Then we can look for that overall reversal as far as demand goes for this trade right here. Where did we break structure to the upside on the right when we were looking to confirm? Right, that double break of structure to the upside right here. Was there volume present within the market at that time? Yes, there was. We can see that wick. So we liquidated lows to the downside, then broke structure to the upside. Confirm that with the double break, right? That W that we look for to show that accumulation. So now from our higher time frame accumulation, our higher time frame W that we had formed right here, we now have the lower time frame confirmation of that. And I'll draw it out. I'll draw it out like this, actually. So that introduction of demand that we can see as we are breaking structure to the upside, continuously manipulating lows and leaving those highs, leaving those equal highs, those relative equal highs, those areas where retail gets into this support and resistance, right, type of scenario, and they're constantly, right, trying to short this with their stop losses over these highs and take this to the downside. So every time it comes into their area, right, they're shorting it. And then what eventually happens? They are now the reason, right, that price continues to the upside. It builds all of this liquidity, all this retail short liquidity that we can see over and over again, right? And then from the bullish narrative, so now that we are bullish overall, putting in higher highs, higher lows, right? And then we show the demand introduction. We can now see the reason as to why with those equal highs, the relative equal highs on higher time frames, and then we can even see them on lower time frames as they come into these areas. They're the reason that price continues to the upside. The liquidity is why price moves, right? Um, Money is why price moves. Money is why the market is the market, right? We need to understand how that is transactioned between the buyer and the seller, right? So we now can see why price moves to areas that it does and why it makes sense for price to move to areas that it does when it does, right? With the volume increase that we can see showing in the market as well. That little tip, that little footprint that we are looking for, that break of structure with displacement meaning it leaves in balance, right? The structure shifts as well. The accumulation, manipulation of lows as we are leaving highs, right? Breaking structure to the upside with impulse. Everything starting to come together. And then our higher time frame, obviously our top down analysis from our higher time frames to our lower time frames. So like we were talking about before, make it as simple as possible as impulsive move that breaks structure to the upside, right? Your area of demand, and then the confirmation within that zone, right, which is shown right here. So 1, 2, 3. Everything that we just talked about, everything that we went over, that was told to you guys for you guys to understand it, so you can go in there and make sense of why I'm talking about what I'm talking about when you were looking to take your trades, is being shown with this little scenario right here, right, where it is simply just impulsive move that breaks structure to the upside, area of supply and demand, confirmation within that, right? You can use Wyckoff as a confluence as well. I like to use a ton of confluences to be able to get into a scenario on a lower time frame trade to where I can add a lot more margin and risk still that same 0.5 to 1% that I'm looking to risk, right? So